All right, Kirby. So Nike stock in these days, I don't know when this video is going to come out, but currently right now on June, what is it, June 29th, Nike stock is down. It's in the 70 range. Does this remind you of what happened to Meta or Facebook stock? Or do you think Nike is facing more complications than maybe Meta was facing? In other words, is this an opportunity or is Nike just gonna go back to, we're gonna go back to wearing nothing, just barefoot?
I think I think Meta was in a worse situation as far as just company wise. I think Meta was in a worse situation than Nike, only because Meta was blowing way more money, percentage wise of revenue. Nike's issue right now is the things that we've talked about. People don't want to believe it, and even now, you hear today, if interest rates go down, a percentage point, the housing market is going to go crazy. Yeah, for investors, for institutions that have money to play in that market, but the consumer itself is stressed in. We're all time high on credit card debt, auto loan delinquencies, the foreclosures in home numbers are starting to increase. People are cutting prices on their homes because they're desperate. The thing that nobody mentions is the fact that we had low interest rates and we had trillions of dollars pumped into the economy. So we can go back to low interest rates, but we don't have the money no more. Well, most people don't have the money no more. So the whole nuance of thinking of, hey, yeah, we going, interest rates gonna go down. It's gonna be just like when COVID happened, and we're gonna turn back up again. No, everybody think it's just gonna be simple as, oh, everybody's gonna be able to sell their home and then go buy another home. No, because some people lost jobs. Some people still probably have the same jobs, but they added more debt in other areas, so they can't go, leverage what they had. It's a lot of different dynamics that's in there that people are not factoring in. And the biggest one is the car payments, the credit card debt, the child care, all that stuff. Back during COVID times, they had all the extra money to pay for it. Now all the extra money is gone. And then they still had more debt. There's more student loans coming online. So where's this extra money coming from? You're still gonna need down payments. You're still gonna need the ability to have a debt coverage ratio so the bank will think you're bankable. The bank know what the economy is doing. The bank knows that the unemployment rate is rising slowly but surely. So the banks ain't gonna just be willy nilly, just blindly, just like with their eyes closed, just throwing out money to people like they was doing in the 0% interest rate. That's the nuance that's out there. But going back to Nike, sorry, I got on a tangent. But going back to Nike, Nike's problem is the consumer. Right now, like I said, the consumer stressed in. Nike will always be Nike. Do I believe that this will be an opportunity? I say now, they just announced earnings 2 days ago. It went down 20%, I believe, yesterday, which was the 28th, June 28th. I say give it, 2 or 3 days, let it settle out. Let it settle out, and then build a starter position. Build a starter position. Let's say you want, 100 shares of it. Build a starter position of 5 or 10 shares. That's it. 5 or 10 shares. And then you just see where it goes. When it drop, you buy more. When it drop, you buy more. If it stay in this $70 range, then you just start peppering, going down the line. But and then if it takes off before you can build your whole position, okay, just let it ride. You're in a game. But if you're sitting here thinking that you're going to sit here and be like, "Oh, I'm gonna catch Nike at the bottom at $59.86." I don't know if it's going that low, but if and you think you're going to be ready, and then you're going to put your money into place, it's not going to happen. Trust me, I've tried it a million times. I got lucky once. I got lucky once. And it was just because I was sitting there by the market, and I was actually just putting the money in. I didn't know it was gonna be low. I was like, all right, this is my starter position, but my starter position was a little bit higher because I was like, I want 10,000 shares of this company. So I bought 1,000 shares right there, back. And then it would just kept hovering around that number, but it wouldn't go less than the number. And I just was like, all right, I'm just gonna keep peppering in, peppering in, peppering in. But I caught the low, as you know, Alex of Bank of America. But that was truly by luck. I was just doing a starter position and I just kept doing it because it was hovering around the area, like, all right, it won't go down. So I'm just gonna keep buying. And then it was just happened to be the low. But I thought I was gonna buy, it was gonna drop, and I was gonna get some more, it was gonna drop, it was gonna get some more. And then that's the way I was gonna play it. But Nike right now is just the problem of the consumer. All the extra money that they had from the years previous, the consumers don't have it to go buy. You know, the whole sneakerhead thing is still going on, but it's not at the scale that it was back then when everybody had extra money. So, Alex, I'm gonna give you a chance to speak because I can go talk about this topic for I was gonna say a millennia again, but don't say a millennia here on YouTube because people
Yeah,
will tell you,
yeah, they're
and you know how
gonna
much a
be.
millennia is. But I could talk about this for a long time. So, Alex, what you got?
No, I agree. I think Nike too is they're definitely a leader in that industry of shoes and footwear and sportwear.
Absolutely.
But I don't think they're going anywhere. Especially it caught my attention when recently I went to get my foot checked and the doctor recommended Nike shoes. I thought that was so funny. I was like, if doctors are recommending this, then Nike's definitely doing something right in business. So,
Right,
I mean,
right.
it's crazy. I mean, I think I like where they're sitting and I mean, I'm getting closer and closer trying to get my 100 shares on S&P 500, but Nike looks very attractive at where they're at, and I did see like another opportunity like I got in Meta or Facebook. So it's interesting. I mean, in this market, it's like, we're seeing all-time highs in the S&P 500 and the Nasdaq, but then there's some individual stocks that are hitting like some big companies that are hitting those lows in these, past 1, 2 years and even today. So it's interesting. There's a lot of opportunity even in these high markets in certain individual stocks, but Nike was one that came down yesterday. I know you put it in the Discord and that was a big drop, 20%.
Yeah, I think Nike's down 70% over the last 2 years. Um, but it comes down to so the question is, will they recover? The question is, will they recover? Yeah, because there will be there will be another boom time in the United States. It will be another time where people are flush with cash. It'll be another stimulus check. It'll be another quantitative easing. It will be more rate cuts. Those things will come. Nike is a global brand for a reason. Nike's worn by every major sports league. Everybody still want to be like Mike, and Mike ain't played in over 20 years. So, now you got the LeBron James of the world. You got the Kevin Durant of the world. You got all these people that's ambassadors of it. And then, of course, with Caitlin Clark, bringing the women's WNBA to the forefront. That just opened up a whole new catalog of customers. So it's a lot out there that it will do. But the key is, as Warren Buffett always say, you have to be greedy when others are fearful. This earnings call, people got fearful. They lost 10% market share and then they lowered the forward guidance into 2025. And of course, you hear a lot of pundits talking about recession may come. That's why, again, I'm not a big proponent of just saying, oh, I caught the bottom here. Because it could be, hey, Nike's sitting here at 70, and then the market in general rolls over. So we might get down to that 59 that I'm talking about. And then you still got ammo in the bucket. You still want to be buying, but you have to be greedy when others are fearful. When it's going down, the people that selling are fearful. But if you get on the same boat with them, but oh, I'm just gonna sell right now, then you're missing your opportunity. The market, the market benefits the patient by taking advantage of the impatient. That's all it is. You just gotta buy, build, and then wait for it to go back up. Just be patient. Nike is a global brand for a reason, and it ain't nothing gonna change it. Nike, it will still be the alpha, no matter if we go in the biggest recession in U.S. history. And I don't think we are going there, but I'm just saying Nike will still come out on top, smelling like roses.
That
But
was well
Alex, you got
put.
any more on this?
No, that was well put. The market will take care of the patient by taking advantage of the impatient. That was very well put. But with all that being said, though, guys, let us know if you're gonna wear Nike or you're gonna go barefoot. Don't forget to share this video, subscribe, and we'll see you guys in the next one.